There's some behind the scenes action going on with big money right now. And it looks like big money may be making a play to front run a big move in Bitcoin. We're going to take a look at a sequence of events that have taken place over the last couple of months, and it may be purely coincidental. But after taking a look at what has happened and the order in which it happened, I will let you be the judge of that. This story starts back in 2021 when China banned Bitcoin mining. Now, many Bitcoin bears looked at this as a victory and said, hey, look at all you Bitcoiners, and said that you couldn't ban Bitcoin. Well, look, China just successfully did. Well, the rest of the world kind of took that as an experiment and said, hey, let's wait and see how this thing plays out. And now, about 2 years later, the data is very clear. While Bitcoin mining did drop off a cliff when it first was outlawed in China, it has since recovered by a large margin. In fact, current figures show that China currently accounts for about 20% of all Bitcoin mining. This gives support to the claim that there's a very big difference between passing a law and enforcing a law. Add on top of that the fact that a few weeks ago, Hong Kong made a big push that banks should actually be supporting licensed crypto exchanges. Not only that, but HSBC in Hong Kong launched support for Bitcoin and Ethereum ETFs. And it's not just China and Hong Kong. Now we're looking at Spain as well jumping on the wagon. Spain's largest bank, Santander Bank, just joined the list of financial institutions exploring Bitcoin. So it seems the tides are starting to change with big money all around the world. China, Hong Kong, Spain, piling on global evidence that Bitcoin can't be stopped. But Bitcoin and cryptocurrency are not the same thing. And I've detailed Operation Choke Point in past videos, but it looks like the US government intentionally held off on passing any regulation whatsoever about crypto until the final moment when it would be just right in order to crush as much of the crypto industry as possible. And that is happening right now with the SEC's crackdown on crypto. On June 6th of 2023, Coinbase was sued by the SEC for operating its crypto asset trading platform as an unregistered national securities exchange and broker. On top of that, the SEC also charged Binance for misrepresenting trading controls, oversight, and the unregistered offer and sale of securities. So it looks like the government is choosing its battles and looking to try and take down or at least control what it can and ignoring what it can't. Even prepping the US public for a future central bank digital currency as a replacement for crypto. Now, as a side note, one of the things that I teach in my Heresy Financial University membership program is how to avoid getting trapped by things like a future CBDC, how to have some of your portfolio in gold, both here and offshore, how much to put in Bitcoin, how to hold it in Bitcoin. Should you use an ETF or trust like GBTC, or self-custody, or use something like Coinbase? And if you've watched my videos, you obviously know that I don't recommend any of those, not your keys, not your coins. So if you're interested in gaining access to the entire training library of courses on portfolio allocation, hedging, advanced investing strategies, and much more, link is in the description below. But over the last 6 months, data has come out that shows a strange amount of institutional buy-in, not to crypto, but to Bitcoin. Over the last few months, it was revealed that MicroStrategy just received a massive investment worth about $250 million from Fidelity. In addition to that, BlackRock has also increased its stake in MicroStrategy. If you're not aware, MicroStrategy is one of the few publicly traded companies that holds itself a massive amount of Bitcoin in its treasury. And so MicroStrategy is increasingly being looked at as a proxy to be able to invest in Bitcoin. But this was just the start. A new crypto exchange called EDX has recently been launched, and it is backed by firms like Citadel, Fidelity, and Charles Schwab. Now, remember, the SEC has just gone after Coinbase for operating its crypto exchange. Meanwhile, a Wall Street-backed crypto exchange is just now getting started. But again, it doesn't stop there. On June 27th, a brand new Bitcoin ETF just launched. This is a 2x leveraged Bitcoin ETF. Now, this ETF specifically is a Bitcoin futures ETF. This means that it doesn't hold any Bitcoin itself. It owns futures on Bitcoin, and it is leveraged. So if Bitcoin goes up, let's say 10%, 10%, then theoretically this fund should go up by 20%. Similarly, if Bitcoin goes down 10%, this fund would go down 20%. One note of caution about leveraged ETFs in general is that they are daily performance tracking vehicles, meaning that over the long term, if Bitcoin were to slowly go up, but it's a little bit volatile along the way, you could very easily still have a leveraged ETF that's supposedly tracking that security go down. And this is because of something called beta slippage. Here's how this works. If you start off at 100 and then you go down by 20%, you're now at 80. Subsequently, if you then go up by 20%, you're not back to 100 because 20% of 80 is not 20. It's only 16. So when you go up 20% from 80, now you're only back to 96. So you're still at a loss. And run the calculation, doesn't matter whether you go up or down first. This means that anytime you have a leveraged fund that is tracking the daily performance of the underlying asset, over time, the value will bleed off. So be very, very cautious using these, especially anything longer than a couple of days at a time. But this 2x leveraged Bitcoin ETF, while it is new, again, it is not the last place that this trail of breadcrumbs stops. In a shocking move, BlackRock just filed for a Bitcoin spot ETF. Now, if you're not familiar, in the United States, we do have something that looks like a Bitcoin ETF, though it's not. We have the Grayscale Bitcoin Trust. Now, there are different sets of laws that govern trusts and ETFs. And so far, the SEC has not allowed any pure Bitcoin ETF to be started. But the rules are looser with trusts, and so Grayscale is able to get their Bitcoin trust passed. But because of the way trusts work, sometimes it trades at steep discounts. It's traded as low as a 50% discount before, and as well, it's traded at as high of a 50% premium. And so many investors for a long time have really wanted a pure spot Bitcoin ETF, an ETF that actually invests in Bitcoin itself. But the SEC has always shut down every single filing request for one of these things. So why is BlackRock filing for a Bitcoin ETF now? Obviously, we are in the middle of an SEC crackdown on crypto, so the timing is odd. The second thing that's odd about this is that BlackRock is clearly aware of the trail of corpses from past filings that have gotten denied by the SEC. So why would they throw their name into the ring if they know that they're going to be rejected also? The third thing that's odd about this is that BlackRock is planning to use Coinbase as their Bitcoin custodian. That's right. Coinbase, the one who's currently being charged by the SEC for operating an unregulated securities exchange. And if we take a look at the action in the stock price of Coinbase, that looks weird as well, because the stock price did tank on the day that the SEC charged Coinbase. However, the stock is up 50% from that bottom, and on top of that, it's up almost 8% higher than it was before the charges came out. Now, BlackRock certainly knows how to work behind the scenes. They've got the friends, they've got the money, they've got the pockets, but it's not a 100% certainty. Cathie Wood's ARK says that she is actually first in line for a spot Bitcoin ETF, saying that if a spot Bitcoin ETF were to be approved, that hers would get approved first, even in front of the world's largest asset manager. Given the fact that some big institutional money, Wall Street, behind the scenes for the last couple of months has been slowly building up what looks like a position, a proxy position in Bitcoin through MicroStrategy, has been putting together their own crypto exchange that would rival Coinbase. Recently launched a 2x leveraged Bitcoin futures ETF, maybe in anticipation of a lot of additional money suddenly being allowed to buy Bitcoin through the launch of a Bitcoin spot ETF. Because many retirement accounts, IRAs, 401ks, brokerage accounts do not have access to Bitcoin right now, but if a Bitcoin ETF were to be launched, suddenly they would have access. And then BlackRock, the world's largest asset manager with deep connections and deep pockets, suddenly makes a filing at seemingly the worst time possible during an SEC crackdown on crypto, using Coinbase as their custodian. It seems like somebody knows something is going to happen. I'm not saying it's a certainty, and I'm definitely not saying that you should make any financial actions off of this information, but at the very least, it is interesting. And I'm very curious to see how this plays out. As always, thanks so much for watching. Have a great day.